York on Thursday, 30th day of January 2014, and this is the daily report for gold and silver. Stronger U.S. dollar, a equity market that was up about 1% today. Tremendous pressure again in the precious metals markets as we see them plunge below that long-standing resistance line. 1242.70 current print on the screen puts it off about $25, a little bit over, almost 2% on the day. Tremendous drop. 37.40 the low, 64.90 the high, and absolutely got stopped out. Our stop was sitting at 12.45. More on that in a little bit during the show. Silver also plunging. That's off almost over 2.5%, 2.66% lower, down 52 cents on the day. You can see on this weekly chart the way that silver is literally plunged to the bottom of the range, currently trading just above $19 at $19.17. The low, $18.93, and the high, $19.73. You know, to say that this market has been a tricky read, a difficult read, is an understatement. As we looked at this market on a strictly technical basis, we saw a series of lows, and as these lows came in, we had a series of higher lows pretty much across the board as the market went through its stair step. When we looked at the highs, we had a series of higher highs. It really appeared as though we were in a full-blown rally. Now, market came down, and you can see really in terms of the range itself, this whipsaw activity that we've witnessed over the last few days, in which we see it make a high. This is that high at 78. It comes down. We really thought we had some solid support at 1249. That's where I was really pegging support at. This 1242, of course, we talked about the 61% retracement. This is a 76% retracement. That's a very, very short-term retracement of just this move. But now what we're seeing is exactly the opposite, because if we look at this high, we've got a lower high. Compare this low to this most recent low. We've now got a series of lower lows, lower highs and lower lows. We also have inflicted what I believe to be critical damage in terms of breaking back through that resistance line. Now, what prompted all of this? One of the things that prompted it was the equities markets. The equities markets is on a rampage. I believe it was up about 1% today. And you almost had the same craziness that we've seen in gold, in that we talked about the fact that we hit, this is a daily chart, of course, we talked about the fact we hit these series of tops up here. Market comes down, but look at this trading activity over the last, call it 4 or 5 trading days. Alternating candle color, so you had these 1, 2, 3 major down days. Market comes down, looks like it appears to get some support, comes back up, but on the following day, meaning yesterday, we had the market plunge again over 100 points into triple digits. And then we look at it today, this candle has absolutely engulfed, well, hasn't engulfed because it opened really right above the lows, but it's made a new high on the day, and it's also come above these tops. And so what we're getting is, with a strong U.S. dollar first and a strong equities markets, tremendous pressure in the precious metals market. So what are we thinking this market's going to do over the next week? We're going into the end of the month. We also had position squaring going on. But what do we think in terms of next month, where we see this market go? Now, before we take a longer-term perspective at the market, I really wanted to look at this particular resistance line as we blow it up. And you can see that the market is at the resistance line. It has traded below the resistance line. And on this particular chart, it is currently just above that. However, that's not the same case when I look at my weekly that has a slightly different angle on it. Let's pull that. And when we look at our weekly chart, this is our long-standing resistance line. We can absolutely see this is a weekly chart. Our close, or the bottom of this red box, the rectangular box, open, top, close, bottom, trading on the lows, also trading below this resistance line. So what does that have us believe, and where do we think that this market's going? Well, first of all, the fact that we have broken below that, my sense is that what we're going to witness is a we saw the breakout slightly above it. It's now below it, so we're probably going to see some lower pricing. However, the one thing that stands out to me is the fact that when we look historically at the market, we typically get our lows, cycle lows of the year, roughly at around February. And the best way to look at that is this weekly chart. Let me compress it just a little bit, as long as we can keep the months in there. And I'll start over here. This, at the beginning, of course, this is 2010, 2011. You can see the market comes up. It hits that high at around 1200. And this low, this cycle low, happens in February. Go to 2011. Beginning of 2011 is here, and we see this cycle low right here is just about the end of January into February. And in fact, probably the best way to look at it is going to be to pull up our crosshair so we can actually see the time. So this took place 1/28, so just before the end of February, right in here. This cycle low also down here took place roughly in February. So there's absolutely some historical precedent of cycle lows coming in. Here's 2012. Here we got the cycle low really in the end of December, beginning of January. And if we go to 2013, that's a completely different story. We didn't have a cycle low. The market pretty much drifted lower the entire span of the year, as you can see right in here. But we do have cycle lows that appeared in February out of the last, call it 4 years, 1 year, 2 years, and then this, of course, the 12th. We had a cycle low right here. So we had 3 years, 2010, 2011, 2012, in which the beginning of the year, end of January, beginning of February, we saw our cycle lows. 2013, obviously very much a different ball game. However, my question now is, and this was one of the things that I was looking at, was I had believed that we probably had our cycle low come in, and I falsely believed this, and it was based upon the breakout above this resistance line. However, the fact that we got no follow-through whatsoever concerned me. It concerned me the other day. And then yesterday when the market came up, I had a sigh of relief. It was a very, very short sigh of relief because, of course, I saw it falling overseas and then just getting devastated in the market today, down $25. So where do we stand? I still believe there's going to be an opportunity to possibly see some sort of a cycle low, but I think we're going to see some lower pricing first. My recommendation is obviously going to be, we're going to let the dust settle. We're going to see how much lower this market wants to go, what the equities markets do, and really importantly, what the dollar does, because we've seen some real dollar strength. And I think that we'll have an opportunity to really see a cycle low sometime in February. So my sense is that we'll probably see, as if this market begins to drift, and it certainly is below that long-standing resistance line, I'm looking at anywhere between 1220, 1225 as a potential bottom in the market. That's where we have seen some support. And at that point, we will make our decision whether or not we want to take a stab again at the long side. Certainly upset that the market stopped us out, but the market does what it does irregardless of our sentiment behind it. Sometimes we're right and sometimes we're wrong. In this case, we were absolutely 100% wrong. The market did come up. It did break through the particular resistance line that I was looking at, but there was no follow through, and now we can see that it has moved back into that zone. Silver is actually in more of a precarious place when you consider the kind of drop that we saw. We absolutely saw this real resistance at 1251. We talked about the fact that 1258, I believe, was a pretty critical area. Once it broke through there, of course, we had this market really have some dynamic follow through to the downside. Right now, support has got to be at about 1890. And the low today was just around there. You can see it's just a couple of ticks above there. We are currently trading above $19, but my sense is that it really needs to find some sort of support in this area, because if it does not, the next real level goes down to about $18 per ounce. This is Gary Wagner wishing you as always good trading. I apologize. We certainly didn't get that today. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.